Greetings, everybody. This is Jeff Scott. It's almost the 28th in about 8 minutes. It's just about midnight. You have to wonder what the heck I'm doing these things at midnight on Saturday night, but I want to get this done. So I got toys to play with tomorrow. I title this, When Does a Melt Up, now going into week 4, turn into a Climax top? And I'll more comments about that in a bit. But what a week. Oh my God. And congrats to anybody who actually took the NFLX trade. I suspect most people didn't take the Scott synthetic because they're probably not too familiar with it. But as you'll see in a little bit, didn't matter all the trades that I suggested worked for Netflix. I can't say that for everything else, of course. Email address if you want to comment, interact with me, hgsidoc@gmail.com. As always, these are for education purposes only. I'm a doctor, not a broker. Most physicians lose money with their investments. Hopefully I've broken that mode. I am independent. I pay for everything that I use, and trading involves risk, and you alone are solely responsible for any decisions that you make. Don't want to spend a whole lot of time here, but when I train people or teach people or mentor people, I always like to say, be your own guru. And what I mean by that is find smart people who have developed things or have taught things, and listen to them, and then figure out what makes sense to you, what doesn't make sense, and then can you put that together into your own trading style. For me, it started with Cancelim. It was improved by Morales and Catcher, even better by Ian Woodward and Ron Brown. I learned a lot from my trading buddy George Lee, position size and money management from Van Tharp. And then what I really learned was, once I identified something, what trade do you take? Which option trade? Stock or option? When's the right time to make the trade? Where should my stop be and my target? I learned that from John Person. And he's a great author, mentor, teacher. He's got some wonderful indicators in Thinkorswim and TradeStation. And I highly recommend him to those that haven't been exposed to him. But basically, I put that together and I get myself. And I'm not a guru. That's what Ian Woodward said. I say the same thing. What I'd like to do is help to influence you to become your own guru. And if you come to one of my live seminars someday, maybe I'll even teach you. What I need on my desert isle besides high-speed internet is I need trading platforms. I use TradeStation or Thinkorswim. I like Genesis. Most of you will never buy Genesis, so I don't spend any time with Genesis on these programs. Why? Because it's expensive. And unless you're a futures trader, you don't need it. And if you're a futures trader, you're probably not on my calls. From an analysis perspective, I'm a big fan of HGSI and EdgeRater. Seasonality, when it works, wow. And we'll talk about that today. You can see some of the programs I use, some of the websites I follow. HighGrowthStock.com, I have no affiliation with them except try and support them because it's really helped me make money over the years. The key things about this on the website, there's a free 30-day trial. They don't require a credit card. Those that download the software and want a little bit of help, I've created a couple of videos, as has Ron Brown. His are more up-to-date, of helping you figure out what the buttons are. It's a very minimalist approach, but once you figure out what they do, it's the most powerful tool on the market, in my opinion. And under investing strategies, you'll see a number of videos that I and others have done. Stock patterns are cyclical. I feel like a broken record. You don't get a stage 2 buy signal outside of after basing. All right, so we haven't based in this market. But sometimes you can't tell the difference between a stage 3 when you're going sideways and whether that's a new base or just a pause to refresh. And so instead of doing the traditional run up, pause, and come back down, which we will do, I can take that to the bank, every time it seems like we're going into a stage 4 sell-off, we have another leg up, another stage 2. We continue to do that, and we'll look at why I think a Climax top is something in our future. Based upon where I think I am in the market, I changed my approach. And the reason why cover calls are yellow, when I'm very bullish, I don't want to limit my upside. I had a couple of spreads that I ended up underestimating the power of the stock move. And I make a lot of money on those spreads, but I could have made more had I not sold a call against it. But you have to change how you approach based upon where you think you are. Where are we today? We're in this huge leg up. I think that at some point, whether it's Monday, whether it's 6 months from now, it takes till October, I doubt that, but it could. Think 1987, we're going to come back down. But I'm not saying sell everything and get out of the market because I don't know when, and I certainly haven't done that. If I look at the sectors of where the market ended up on Friday, pretty strong day. Now, the funny thing is, I was out on my boat. I should name my boat Netflix. And on Friday, and my account, I had a good day, but I had a much better day before Steve Wynn got in trouble from noodling with some employees. We'll see where that goes. I don't think this is a Weinstein where the whole company implodes because of Weinstein, but he did give up his RNC finance chair position, and it'll be interesting to see how fast Wynn can snap back. It had great earnings. It's a big Macau play. Macau is getting better. I think there'll be a lot of press, especially on Monday, but maybe by the end of the week, Wynn will turn around. Other than that, I had a great week. I'm sure you all had great weeks, and everything is green in all sectors, and except for utilities, which didn't look that bad, looked mixed on Friday. The sectors are strong. As always, I like to just go into Think or Swim. Now, this will be the last time I'm going to share this piece with you. Everybody has a different approach to the market. Let me see if I can fix that. Oh, come on, Jeffrey. And, does it work? Does it not work? And I've not kept you away from my numbers in the past. I'm not going to do it now either. So let me, just to make my point, let me bring it back. The reason why I think that we've got some problems coming, or we will ultimately not have problems, but necessarily, but expect the market to, at some point it's going to correct. See if I can move this thing out of the way. It drives me crazy when it sits here, but I don't think I have a choice. Let me figure out what I'm going to do here. Hold on a second. Let me just pause it for a second. Now I'm going to show you what I show you just because to prove the point that what I do can make money, that I talk a lot, but actually I've had pretty good success. And as I said, this is probably the last time I'm going to show it this year because I don't want to jinx myself too much. But as you could see, this is in less than 4 weeks. I started actually as a debit here because I decided to upgrade on some things, but I started at 2.5. This number gets affected by money that comes in out, but I started with 2.5 and I'm up 1.229 on that 2.5. So that's somewhere about 45% year to date. I'm pretty proud of that. But I'm going to talk about Climaxes because I don't for a minute think I'm that good. 45% in 1 month, there's something, either everybody's making millions and it's going to continue forever, or the reality is we're getting into a climax top. And I've been around long enough to know that I'm not going to do 480% returns over this year, not on an account like that, maybe on an individual stock. So something's got to give, and I have my thoughts on that, which I will share with you. So no more seeing my account, but if you don't believe that I know how to do something, you wouldn't be here anyways. Just take a look at the market. In fact, let's just see if I could do this. All right, drawings, that's what I want. Drawing tools. So you had a market that, oh, don't do that. All right. It's not exactly what I wanted it to do, so let me start this over. You had a market that had a nice run up, and now it's increasing the speed of the run up. You'll see it more, I think, on the weekly chart. So E-minis, Tough day on Thursday, then almost a bullish engulfing pattern, a new PPS buy signal on Friday. Very strong. NQs, spinning top on Thursday and Wednesday, looked like maybe it was topping, and then boom, breaks out to new highs on Friday. All right. YMs, they just don't stop. Now, I think that the degree of return, the rate of ascent is increasing, and if I'm correct about a climax top, it will start to increase even more. Now, one of the slower moving things here is the IWM, and you can see it's actually flagging right here. And frankly, the last couple of times it's been flagging, it was a setup for a new leg up in the market. So we'll see what happens there. The VIX has not gotten as low as it was. In fact, somehow the VIX has managed to stay above the 200-day moving average. Now, it's not rising, and in my experience, I have pain when the VIX is rising. So the absolute VIX perhaps tells me we have less complacency in the market. Maybe more people are concerned, but it's not rising, so it's not impacting on my portfolio. A falling VIX has been great for my portfolio. And if I look at the dollar, there was a Thursday was an interesting day. Mnuchin talked the dollar down, Trump talked the dollar up, and then Friday it sold off again. But when I start to see this tail down here, it wouldn't surprise me if the dollar bounces a little bit here, but I think longer term dollar's coming down further. Let's just look at some weekly charts. Maximize these. And you could see kind of, I think, where it looks like on the weekly charts we're starting to see an increase in the rate of ascent. This is the E-mini weekly. Here's the NASDAQ weekly. Here's the YM weekly. The IWM weekly actually closing at an all-time high, or new, as did the others. The VIX, as you could see, struggling here. Notice the VIX was up this week. And the dollar just dropping. That's probably been very helpful to the market, by the way. So, I only show you what I showed you in my accounts because, there are a lot of people that will tell you how great they are and how great they're a trader and give us all your money and we'll teach you how to make money. It'd be nice if they all showed you how they performed. Sometimes I like to look at my Genesis because I could put on the top row daily, middle, weekly, bottom, monthly, and I could look at the E-minis versus the NASDAQ versus the TF Russell futures versus the NYSE and then the Dow futures. And if you wonder why you're making money, this chart says it all. And again, are we changing our rate of ascent here? I can't tell for sure on the monthlies. The weeklies, I get the sense that we are, and certainly the dailies look like they're getting a faster rate of ascent. And we'll talk more about a climax top. Rates, I need to change that. Rates are not stabilizing. Rates are increasing. So what does higher rates mean? It means that it's good for certain things like banks and insurance. And it's bad for REITs and MLPs and utilities. Utilities being the weakest sector right now. This is both on the 10-year and 30-year treasuries. AD lines in white, S&P 500 in yellow. AD lines in the Russell 2000, the 1000, and price are spiking. There's no divergence there. If I look at the AD line on the NYSE here, and this is a weekly chart in white, the only things that are falling off are bonds and perhaps, you can't see it here, but transports actually diverged a little bit this week. Now that may be a bad thing for the market. My guess is it's a one-week wonder. Breadth. I'm looking for things that say the market has to fall over because we're so far extended. Well, when I looked at my stocks this weekend, we're extended. But when I look at things like this, we actually are still below prior peaks in stocks above the 200-day moving average. And we actually came down on percentage of stocks above the 40-day SMA. So strong, but not overbought. If I look at the 3-month new high, new low, which is a short-term timing indicator when it peaks, the market usually has a pullback, although short often, and we pull back this week on the indicator. So again, nothing that says we have to pull back on Monday. The daily McClellan had a zero-line reject here, which is bullish, and on the weekly you can see it as well. So I don't see anything that says this market is done, except I'm a realist and recognize they don't go on forever. Buckets. This looks at in the S&P 1500 as captured on January 1st. This is Friday. It shows that on Friday, 71% of the stocks in the S&P 1500 were trading above the midline of their Bollinger Bands. And then I look to see what the distribution is within the Bollinger Bands and specifically look at how many are above or below. And 10%, 12% above, 2% below, there's no signal there. So again, another sign that says we could go further. There's no evidence of a Hindi, and you wouldn't expect one. And we're also not near the top of our percent new highs. And interestingly, we're off the bottoms on the percent new lows. Bull market tone, I called it a bull stampede, where this is the Woody indicator here in green. It looks, doesn't say look, it's when it's all green like that, you feel pretty giddy about the market if you're long. The last time it looked this good was November to January, then a little bit in February of last year. So the election rally, you can look back months. We haven't looked like this in quite some time. And sector strength improved, and now the only sector in yellow is utilities. And again, signs of a broad-based market improvement. Now I use a number of indices to help alert me to changes. Well, FANG stocks, and these are FANG extended canaries, break out again to new highs. They actually had a gap up on Tuesday. And you could see Bongo Weekly's green, and they're the highest that they've been. All right, that's bullish. I put together an index of leaders in June, and it proceeded to have just a slow increase after a major increase here. And guess what? It turned itself up again the beginning of this year, also closing at all-time highs. Then I decided I needed a new index, so I created this last week to be an early warning sign of the market. I reviewed this last week. I don't need to go through it again. These were the stocks that I liked, and I try to limit it to no more than 2 stocks in an industry group. Again, these are leaders. They're not buy points. And you could see that my leaders gave it up a little bit, and there's a little bit of a flag. Now, the weekly bongo is still green. It really hasn't done any violations, and my guess is if the market stays up, it's going to bounce out to new highs as well. But I'll be watching it because it's sort of a divergence here between some of the other indexes. Know your news and earnings. End of the month time. First Friday, though, employment. So you'll have a lot of data on Friday from employment, also rig counts. We got some Fed heads speaking. But other than that, it didn't look like a crazy, busy news week, except for a couple of big doozies. You've got a Fed meeting that starts on Tuesday, and there could always be news out of that, and people will be listening for any hints in their statement that perhaps there might be more than 2 or 3 raises next year. You can see the announcement will be on Wednesday at 2 o'clock. And then, I don't know which night next week, my guess is probably Tuesday, you'll have a State of the Union address by Mr. President Trump. So that could move the market. You just figure it's been a while since he's come out and pounded drug pricing. So maybe we'll get a little bit of that action. So I might be a little leery of my biotech stocks going into that. We'll see. I think his tone may be more centrist, and we'll see what happens. And then earnings this week, big time. Pfizer, now they had a big move on Friday. I wonder if the earnings came out. I'll have to look. Facebook on a big day for me because I turned 60 on the 31st. Boeing, Microsoft, AT&T, Amazon on the 1st. Apple, Google, Visa, MasterCard, BABA, Merck. What a week for earnings. This is not an inclusive list. I highly recommend you check your own stocks. And as it says here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. They clearly accelerated this week. Broad sector participation, but hard to find stocks that have good setups. Driven by low interest rates, but rising tax stimulus euphoria, growing worldwide economies despite a U.S. GDP miss. And although I don't believe it, they're still saying minimal inflation. We'll spend a few minutes going over the Netflix trade. It did not disappoint, from 220 to 275 by week's end. So that's a 55-point gain, or about 25%. Nutso. Risk is still there. Now, when things feel that they're too good to be true, they usually are, meaning they're not going to continue. And once you think things are different this time, you'll realize they're never different this time. So what does that tell me? It tells me that melt-ups usually do not end with just a whimper. Markets may go up longer than you expect. Look for evidence of climax tops in major markets or in a large number of stocks as a clue to get out. We are not going to the moon, although we may go on a lot longer than I or anybody else thinks. Now, I did want to show you something that happened this past week. So I have multiple lists that I track, and I'm looking, here's Netflix, 24.56%, looking from end of day Friday the prior week to end of day Friday this week, a 54-point move. Amazing. So I look in to get an idea of what's working. Why? Because I like to see how the S&P 500 did from Friday to Friday. It was up 2.23%. That's a super strong week. I like to compare that to a couple of things. IBD 50 was actually down 0.25%. The IBD 85, the weekend review, was down 0.9%. That's interesting. And even the HGS 100 was down a little bit. Now, what else can I see here? Oh, I want to see how I did, of course. These were the GIF All-Stars. They were up 2.55%. This is a automatically done scan in HGSI. But I love weeks that are like this, where I'm up 4.26 versus the S&P 500 at 2.23. Not quite double, but close enough for me. My buy watch was also up about 4%. And, I knew it was going to be a good week because of Netflix. If it wasn't for Steve Wynn, God only knows what my week would have ended up. Strong week, but interestingly, the market's been 250, 1.82. For the most part, growth actually seemed to lag, which is interesting because that's not usually a week when I make a lot of money. So, climax tops. I refer you to the reference below. And this is what a climax top looks like. All of a sudden, you start to increase your rate of ascent. Perhaps you have a gap up, and then you hit a new high and close down near the open, and then the next day you start to sell off. When you see this and close at the bottom, a shooting star-like formation, that's a bad sign, and it's a sign that you may want to start lightening up. So look for stocks or indexes that suddenly accelerate. Going up 7 of 8 days or 8 of 10 days is not normal. Look for large weekly price spreads. Often you'll see this exhaustion gap. We're not seeing a lot of stock splits, but we have a lot of expensive stocks. If we start to see an avalanche of stock splits, then that might tell us we're getting near a top. Put channels on, look for breaks above channel lines, and then when you see a big up move and then immediately a down move, those are called railroad tracks, and those are other signs that this might be ending. So we need to be on the watch for this, and this could occur in the indexes, could also occur in a lot of stocks. Let's talk about a post-mortem on Netflix. I've been talking about this stupid trade for 6 weeks. At my December meeting, I mapped it out for the people that attended. And last week I told you the exact trade I was going to take. Well, let's look at some of the results. We talked about, did we have an edge? And I said we did. 13 out of 15 years positive, 20% average return. If you look at the last 10, it was 9 out of 10, and the only down year was less than 1%. So I said this is a consistent EPS winner, and it's worth trading. We looked at Magenta Trader. I have Seasonality Trader, Best Choice Software, and they all said about the same thing, which was they predicted 10 out of 10 times from the date that we measured, which was the earnings date, it would be up an average of 24%. And in fact, if you hold it over a 30-day range, 10 out of 10 times, you're up 24.39%. So that's a pretty darn strong reason to buy Netflix in my mind. I then demonstrated a number of different trades, and in this box, and you might have to stop it and magnify it to see it, I went through some of the different variations. So let me just show you what happened, and I'm going to use a slightly in-the-money strike price for most of my spreads and show you what could have been. Closed the week at 274.60. I'm just going to say 275. If you did a bull call spread, that means you bought a call and sold a call that was out of the money or higher price than the call you bought. You get to keep you get to keep the spread between the call you bought and the call you sold. And there was a 10-point spread here, which meant on one option, one call, which controls 100 shares, it was a $1,000 spread. Since the spread cost you $468 and the most you will get paid is $1,000, your maximum gain was $532. So if you had bought a call spread, in which case you are capping your losses at how much you paid for the spread, which was $468, you capped your winnings at the difference between the strike prices minus what you paid, you made $532 on a $468 investment, but you only risked that $468. If you had done a bull put spread, which meant you would have sold a put at the money and then bought a put $10 away to protect yourself from a catastrophic drop, then you would have gotten paid $368 to take that trade, which was the max profit you would have. And as long as Netflix went up, you would have made $368. Now, if Netflix gapped down, the most you could lose would be $10 times 100 or $1,000 minus the $368 you got or the $632.50. So these are both low-risk trades with capped profits that, boy, oh boy, I'd be really pissed at myself if I did those trades. What about if you just bought the stock at $222 when it opened on Monday? Currently, on 100 shares, you would have them at $275, so you'd have $53 of profit times 100. You'd have $5,300. That's a pretty nice looking trade. Now, of course, when you bought it at $222, your risk was you could lose all of $222. You also had to come up with $222 for a trade, which would be for each option would be 100 of these. So you would have to have $22,000 to buy 100 shares to make that $5,300. All right. We'll skip the synthetic for a second. Then you could have done a long call where for $1,077 you could have controlled 100 shares. So that meant you were paying $10.77 per share. Current value is $57.50. Your profit on this trade of one call, which controls 100 shares, would have been $46.72. So the advantage of this long position here is you captured almost all the money that you would have made if you went long the stock. Your purchase price of $1,077 is much smaller than a $21,000 purchase price. The maximum you could lose when you bought the call is what you paid for it, which was 1,077 controlling 100 shares. So buying a long call is great. The problem is you had to have 1,077 and you were risking 1,077. Okay. The other bad news about buying the call is the stock has to go up before you're profitable because you got to pay for the call. Now, I'd much rather do this than to just sell puts here, although some of the smartest traders in the world, that's all they do is sell puts. So Warren Buffett, for example, might have sold a put for $7.65, meaning if. So he would have gotten $7.65 per share, 100 shares, one contract, $7.65, for the right to sell the stock at the 217.50 level or something like that. I can't remember, can't read it. Now, since the stock went up, the value of that put goes to zero, so he bought it back for $5 and he profited $7.60. So the risk on this trade when you sold the put is infinity. So, or not infinity, it's that your stock drops $220, which is the same risk of buying the stock. So different ways of trading the same stock, the same prices, the same strike prices. And when I look at this, I'm ignoring this when I made the most money on the stock, but I was able to make almost as much at $1,000 purchase versus $22,000 purchase, and all I'm risking here, all I risked was that $1,000. So buying calls is not a bad thing to do. Now, what did I skip? I skipped a synthetic stock. You will notice in the background the P&L curves for each of the various option trades. You will notice that the trade for a long stock position and a synthetic long stock looks identical because it pretty much is. So here's the difference. Since I am buying a long call, oops, sorry about that, and I am selling a put at the same strike price. If the stock goes up, I make money. If the stock goes down, I lose money. I get the exact same performance as the stock, but I buy 100 shares for $3 a share or 313. So I am controlling the impact, the gain or loss on 100 shares for $313, not the $22,000 here and not the $1,000 there. The bad news is just like buying the stock, I got $22,000 at risk. Now this trade worked out well, and you could have sold the short put for a nickel a share or 100 times a nickel, $5. That's what it's worth right now, and you would have made $53.87. $53.87 was basically delta between the contract and what you actually, I think you made $53.82 because you had to buy the contract back for $5. So now, once you bought that contract back, you have no negative risk, but you might give up profits if the stock pulls back, just as if you own the stock. So look at this. Where do you think the winning answer is? Putting out $22,200 for stock? I don't think so, not on an expensive stock. Capping your gains and risk with a spread doesn't make any sense to me. Selling a put and putting a few dollars into your pocket but having a big risk, I don't like that trade. It works for some people. Buying a call, that's not a bad trade. But how about if you buy the call for a lot cheaper? So let's remember that number. And I'm going to show you that my Scott synthetic, which I basically have shown how I do it to avoid some of the margin risk, it's actually a synthetic call. And we're going to look at that in 1 second. So the call cost $10.77. And it's got a profit of $46.7250, and my risk was $10.77. All right, so this is the Scott synthetic. I am sure I did not invent this. I claim no responsibility for it. It's just something that I do, and no one ever teaches it, so go figure. You buy a synthetic stock at the money, and then you buy a put out of the money here to protect your downside. Now, doesn't that look just like a call? Limited downside, all the upside. So I went into this with a number of positions, but my largest position was a Scott synthetic. So let's compare a synthetic long stock, which has a curve that looks just like the stock, so uncapped losses, with my synthetic, because there's got to be a downside, and there is. On my synthetic, I purchased one contract or controlled 100 shares for $790. This is much more than it cost on the synthetic stock. However, my margin risk, and it was a $7.50 spread, my margin risk is not $22,000. My margin risk is $7.50 times 100 shares. Now, this is the wrong number because it's $750 times 100, which is $750. But so just keep that in mind. It's not $22,000, it's $750. So that, obviously there's an error there, and I'm going to actually stop this and I'm going to change it. Hold on. Well, that's easier said than done, so I'm not going to do that. So just keep in mind that I do have an error here, and this is the risk was $750 on 100 shares, not $7,500. So now let's think about this. My current value of the spread is $5,700. So my profit here is $49.10, which is the $5,700 minus the $790, and I forgot the $5, so it's $49.05. So if I look at that call, I paid $10.77 for the call. The most I could risk on the call was $10.77. The most I'm risking here, as I said, is $750 times 10, or times 100 is $750. So this is wrong. And my value is $4,910 versus $46.72.50. So I have designed a trade that is cheaper than a call, has less risk than a call, has a limited downside position, and captures all the gain of owning the stock. I give you the Scott synthetic. Now imagine if it wasn't one contract, but it was 100 contracts. Here are some of the things that people said to me. I'm just sitting here wondering if I really just made 391% since yesterday on one trade. I've never had a return like that. Thanks again for the Netflix trade. One Netflix call paid for a seasonality trader. I guess Eric needs to thank me for that. And you've done great along the Netflix, but you really have knocked the ball out of the park. So I appreciate those comments, not because I need a bigger ego, because at least it means somebody paid attention. And believe me, I do a lot of work for these. It makes no sense to anybody I know why I do this, except I like it. And it forces me to trade better. Let's do my top-down review, and let's try not to be here all night long. So close this out. So I always like to go to TradeStation. I saw that it clicked in and out, so we'll see if I'm still working here. And look at this view here. And I have a 6-point scale just to give me a sense of what the markets are doing. So let's look at the indexes. Let's start with the S&P futures, the E-minis. Let me show you what I look at. Number one, am I in a buy or a sell? A buy or a sell? Daily buy, weekly buy, monthly buy. And these are long in the tooth buys. Number two, what's the color of the paint bar? Green means the buying window's open. I can be going long or holding. I shouldn't be short. Red means I should be shorting or holding, not going long. Blue, I can do whatever I want. Green, green, green. Very strong. Then I look for red dots, because red dots on the top of the price suggest there could be some MACD divergence or less pressure pushing the market higher. We do see that on the weekly. I'm aware. Next, I look at where am I in my auto envelope. It doesn't like to stay above for that long, although here it's just been living above for quite some time. Then I come down here, I look at my bongos, they're all green, which is great. And then I got the fly in the ointment, and we are at 100% on the high jump. You know, things can go on a lot longer than I expect them to go, but I'm nervous because of that. And because of that, I took about $500,000 in profits out of the market this week. Now, it doesn't mean I got rid of the position. And something that John Person taught me to do is roll up and out. Roll up and out. If you have an option and you're patting yourself on the back because you bought it at $35, it's now at $70 for that option, and you're going into earnings, well, you can lose that whole $70. So roll your option up so it's only worth $5. And then you just cut the most you can lose. You roll it out to a distant month so you can continue that longer. So rolling it up or out. Thank you, John, because that one saved my bacon. NQ futures. Green arrows, green paint bars, also 100%. This makes me nervous. Russell futures. Not quite 100%, it's at 90. Blue paint bars in red. This is the weakest of the bunch, as we already saw. And the Dow futures. You want to see some more hundreds? There you go. 100 on the high jump, green everywhere, red dots. This is a market at risk, but as I said multiple times, they can go a lot higher than you think. The dollar not doing well, and you'll see these green bars. And these green bars have been coming on forever. So even though they're there and they should make you concerned about some MACD divergence to the downside, causing downside pressure, if they're red, or upside if they're green, it doesn't mean the market reverses the same day. So the dollar has down, down, and down in all three time frames, and lots of red, and the high jump is low, and the weekly bongo is red. The VIX, as we said, popped up a little bit this week, but actually is in a sell signal now on Person's blue, but weekly is a buy, monthly is a sell. It's confused, which is why it's chopping. And then just out of curiosity, oil's trading at multi-month highs, multi-year highs. We're getting back to the highs last seen in 2015. And gold, very dependent on the dollar, gave back a little bit on Friday, as we'll figure out what the dollar is going to do and whether they want to talk it up or talk it down on the State of the Union. All right. Let's open up HGSI. Let's go down to Major Markets Plus. Hit the warehouse view and rank them by top-down view. And it shows me what the market's been doing, where the strength is, and it shows the strength is in the NASDAQ, the Dow, the NYSE. You got the biotech up there, oil, small, mid, NASDAQ 100. You know, it's interesting, the S&P 500 is further down the list, as are transports. We showed that they had a little bit of weakness. And then on the bottom, volatility of the dollar and bonds. When those are on the bottom, you're making money if you're in equities. So we've already looked at these, so I'm not going to spend a lot of time, but just pulling up go through very quickly, and we just get into a relatively clean view that I've marked up in the past, I think. I keep expecting a pullback to free parking. Look at this. I don't know, maybe I'm just overreading things. Probably are. My wife tells me I do crazy things all the time. I have this run up at that level. Then I run up at this level, and now I'm going up at this level. It looks to me like we're accelerating. And, if we're accelerating, when do we stop? And ultimately, even a pullback to the 50 would not be dangerous. And if you look at markets over periods of time, it happens over and over again. We're due. That's all I can say. If I look at the Dow, same picture, we're due. And notice the high jump bar is pegged. If I look at the NASDAQ, same picture. And if I look at the Russell using the ETF IWM, not as extended. Again, nothing that I haven't told you already. And then very quickly, The dollar, applying the same ideas to it. It's getting oversold to the downside. You expect it to bounce soon. That said, the dollar is pretty damn weak, excuse my French. Speaking of weak, the VIX, although, as I mentioned earlier, it's not below the 200, it's stabilizing perhaps at a higher level. Perhaps there's more concern coming to the market, a lesser complacency, but we'll see. But it's not rising, so I'm not going to worry too much about it. And then as the dollar is perhaps finding a bottom, what's going to happen to gold and silver? And obviously, gold and silver like a weak dollar, and they're trading at some recent highs. I do agree with people like Gil, who spoke this weekend, Morales, that he thinks they're going higher. So do I. But let's not forget where this came from. And of course, I'm going to have to do this because I can do it here. Okay. You can see the dollar has not done much in a long time. If I go on a monthly chart, you can get an idea. The dollar peaked up here and really it's just been going sideways. So we'll see if the dollar continues, and then silver sideways. And then lastly, oil, which has been a big winner of late. It's funny. One of the trades that I gave a while ago, what a great trade. I say it was EC. I just want to look at EC for a second because this trade exhibits the things that I like, and it's been a whopper. And people that watch this every week will probably remember that when it was about 12, I did a Scott synthetic, and I did 80 contracts. It's now hitting 20. So that means the short put is long gone. And we should talk about that too. But this is what I wanted to show you. This is my money shot. And what do I mean by my money shot? Since it's money, I'm going to use a green arrow. Here is a day where I am breaking above the moving averages. I am in a squeeze. Whoops, I guess I can't show that, huh? I have a MOBO breakout. All right, and I moved off where I want it to be. Then I get a kahuna, which is down here, and my weekly bongo is green. That is the trade, and I will take that trade every day of the week. I had that trade over here. Okay, wasn't in a squeeze, but I broke out of some tight moving averages right here. That was another great spot for the trade. I wasn't that good. I picked it up over here. That's the trade I want to take. That's the trade I look for over and over and over again. So now that I've got my sense, I'm still bullish, but I'm nervous. That's why I took profits. So let's now let's go down and look at industry groups and see what might be interesting. We have 174 groups. Let's look at the 2-day force. And we see the leaders of the market. We have 71. How about downside? Only 4. And let me show you what happens when your CEO gets accused of sexual harassment. The big loser is Win, and as you could see, and I'm sitting on my boat wondering why my account got a hit, and this is why my account took a hit. It dropped a lot. It'll be interesting to see how quickly it can get back. Its fundamentals are outstanding. Macau is improving, and Steve Wynn, it's interesting because the person that's making the complaints, he apparently already paid off. At some point, according to the newspaper here, she got a cash settlement. So we'll have to see. So let's go back to industry groups. And what I would typically do, and for tonight I'm just going to go through a couple because it's late. Large pharma, change the index group. All right, how many of you have heard me talk about for a year now how much I love AbbVie? And why do I love AbbVie? I love AbbVie because it trades like a biotech but pays a dividend like pharma. Now, let's go back not too long ago. here's when you had Kahuna coming in. That's pocket pivots. Hold on a second. Here's the day. On January 16th, which was 10 days ago, probably 8 trading days, you had a Kahuna, a pocket pivot, a bounce off the 8-day exponential, a mobile breakout from a squeeze. And it hasn't gone back since. It's up about $22 in a very short period of time. Pays a 2.3% dividend. It's got EPS growth bigger than its multiple. Its multiple could probably be twice the growth rate. AbbVie's a great stock. I love it, and I hope some of you have been listening enough that you've taken this trade as well. Pfizer, as I said, I thought earnings weren't due to the 30th, but what happened on Friday? Big move, pocket pivot, Kahuna, mobile breakout from a squeeze. Let's just take a look. More info from Webb. I own the stock, and I don't even know what happened. Oh, so they got a drug approval. Okay. Well, it's going to be interesting to see how it did. Now, what's the difference between this chart here and this chart here? On the left, we're at 66. Now we're at 126. It doesn't look like this is a big move up. It's a big move up. You have an uptrending stock that went sideways and then breaks out from a squeeze. On Pfizer, I have a stock that's chopping all over the place. I own it because of a dividend and some long-term, but it looks very strong here. Big move up, mobile breakup from a squeeze, pocket pivot into Kahuna, but earnings are out, so I'm not going to recommend it. Earnings are not out yet. I won't recommend it. Those were the ones I liked the most in the group, so let's go back. Semiconductor devices. So Intel had great earnings, and it popped the market, and look what Intel did. Viable gap up. Don't like the future earnings, although that was this quarter, I think. They did great for earnings. Next earnings not out to April. Intel's been a leader. Now, here's one that it was an uptrend, pullback, sitting on support, but this is a little bit more of a chase than I'd want to do. NVIDIA, another leader, continues to go higher. Maxim, let's see if there's anything else here that I liked. Micron's one that I think is worth watching. Now, let's go through the bad news. It's done nothing now since December. It's in a weekly bongo red. It's got a squeeze, which is good, but it can go both ways. The PSAR dot's above it, which is bearish. Look at the earnings per share growth. Look at the multiple. We're going to drop out these 2 quarters, $2.10, and replace them with $4 or $5 of earnings. That's $2.90 difference times a $6 multiple. That's another $15 to the stock price. If it hits these earnings, and if it doesn't have a higher multiple than this, it still should go up $15. I'm long Micron. I'm waiting for it to move, and you could certainly wait till you saw momentum, but I think Micron goes higher. Internet media, Twitter, a lot of buyout talks, Tencent or others, driving the stock higher. A lot of people think it's going to be a great year for Twitter. Uptrend, pull back to the 50, viable gap up, pocket pivot, mobile breakout. You could put a buy stop above that PSAR and join for the ride. I'm not a Twitterite. I don't get it, but it certainly had a nice day on Friday. I do have a big position in Facebook, nice uptrend over quite some time. Look at it on a weekly chart. You really see how tight this has been on the way up. It had a scare last week when it talked about changing the news feeds, and people discounted it for a couple of days, which turns out to be a buying opportunity. Seems to me like it's fairly priced. We'll see how much higher it goes. Earnings this week on my birthday. Google, earnings on the 1st. Looks like it's taken off, setting new highs as well. And then Weibo is one that I'm playing now, and I can't resist. Long-term uptrend, although it's kind of loosey-goosey. It's a stock that I've been in and out of. I am in again. And look what happened right around the first of the year. On the 50, a mobile breakout from a squeeze, a pocket pivot, and a kahuna. Is this not when I buy stocks? I did a Scott synthetic there, and it's up nicely. I just look for patterns. I look for patterns. E-commerce discretionary. Love these stocks. So does the market right now. Alibaba. I should have bought it. I thought about buying it, and then I figured I don't really have room for any more stocks, which I don't, and that's why I started taking profits to clear some room. Plus, at some point, I got to be careful not to lose my nest egg. So, 1, 2, 3, 4, 5 times it failed to break above resistance. On Wednesday it did, breaking out to new highs. I don't think the question is whether it goes higher from here, it's how high. Alibaba looks interesting. No, it looks great. Amazon, well, I've now seen a $2,100 target come out, which is the bull case. I've been long this since 450. I've talked about it enough times. I don't need to talk about it again, except to say, woohoo, and keep on going. Netflix, this was my trade of the week, and boy, oh boy. Now, take a look at this chart. Tell me when I should have bought it. Kahuna, pocket pivot, in a squeeze. This is when breaking above the 50, and this was on January 2nd, and that's when you should have been in it. You could have gotten in it back here as well. What a run. Every year, same thing. Big run, big present, happy birthday, and let's enjoy the rest of the year. Gotta love Netflix. JD.com broke out on Friday. Infrastructure software. We'll look at a couple of these. Now, I don't like that candle. VMware, don't like the earnings per share growth, big multiple. Did have a kahuna and a Bible gap up probably on earnings, I guess, on Friday. Let's see that. Massive volume. Potential Dell buyout. All right, that explains that. Don't like the way that came back in, though. And then Microsoft. Unfreaking believable. Unfreaking believable. What a run. Who would have thought Microsoft, $100 stock? Earnings out for my birthday. Biotech. Biotech was good for a lot of portfolios this week, and I'll show you why. Gilead. Is Gilead a growth stock again? This is the best it's looked in a long time. It's at resistance here, so I'd like to see it get above that. Don't like the earnings per share growth. They're sitting on a ton of cash. They bought Kite. I think they've got some more things to acquire. Biogen IDAC, a big kahuna here. Looks like it's breaking out. Resuming an uptrend. Amgen, all-time high price. Barely. Not exactly a tight pattern. Bioverativ, this is one that helped a lot of people with a big premium buyout by, I think, Sanofi. Celgene bought Juno, and their stock didn't drop much. But boy, didn't you wish you owned some Juno here? I did. I play some individual stocks. I'm limited because of confidentiality agreements on some. So I play a lot of this. This is a long biotech 3X, and it's setting all-time highs as well. I am a little bit nervous of what Mr. Trump's going to say, so I may back off on that this week. Telecom carriers, think interest or dividends. AT&T and Verizon and CenturyLink, we'll look at those. They're not all the same. Sideways played, broke above the 200, which I like to see on AT&T, 5.3% dividend. Verizon, a little bit stronger looking chart, 4.3% dividend, but much more growth coming in here. And then CenturyLink, way in the bottom of its pattern, but look at that dividend, 11.9%. Surprised that they're up there with rates going up. Consumer finance, I guess, driven a lot by Square and the potential for Bitcoin. This is the time to start looking at it. And look at Visa and MasterCard. So what do? I sit around and I look for stocks like this to falter. Because then I get this. I get stocks with a mobile breakout from a squeeze and a kahuna after a pullback. All right. I don't buy it up here. I buy it down there. That said, it looks great, probably goes higher. MasterCard, another beautiful pattern, and same type of a thing. I wait for it to pull back, and then I wait for my kahunas if I can get them. So I actually did go through more of these than I wanted to. So what I do on the weekend, and I've said it multiple times, so just to review, I capture a lot of lists. Some of these lists are from investors.com. Some of them are from MarketSmith. Some of them are from other places. Some of them are some of my own and other folks' scans that are in HGSI. These are some of my favorites. I combine them all in my consolidated buys, which were $11.84. I put a $5, and I think I put 500 this time because the number, I get down to 638 securities, and I looked at all of them. I then take one of the patterns I like, which is a high close doji, and I add my buys to it, and I go into TradeStation, and I look at those in TradeStation. I end up with a buy watch list. Now, the problem this week, to be honest with you, was finding stocks that weren't already gone. And that is a big, big problem. So I don't have a big buy list for me. Usually I have even more. So what will happen is, I haven't set it up yet, but ultimately I will go into my trading system and I will take out last week's stocks and I'll put in this week's stocks for what my stocks and my buy list, and then I will play them based upon my signals, high close dojis, PPS buy sell changes, or perhaps some of the other things that I like to talk about within HGSI, real time looking at mobile breakouts, pocket pivots, Bible gap ups, and then the most important indicator in my toolbox is a freebie. If you're a TradeStation customer, go to the forum and type in Guru EPS, and I know exactly who's got earnings and when. Dates, times, and how many days before they come out. Now, just to conclude, within HGSI, during the week, during the weekend, I spend a lot of time looking up here in these smart groups and in the custom group. In the custom group, this is the top 50 in HGSI, and this is a list of the top stocks. Now, last week, this group here, which will just be a date, was up 2.55%. I look at some of my favorites in the smart groups. So let's just look at my kind of stocks I like to find. Let's look at my name, pull back to the 50 with a kahuna. And let me see if I recognize any of these as making my list. None of them I loved, but let me talk about Nextera. It's too expensive. It's our local utility down here. They have made so much money this year despite hurricanes. It's unbelievable. It's got 3 out of 4 days in a row with a kahuna. Big time bullish. It has pocket pivots. It had a Mobo breakout from a squeeze on Thursday. Big move up on Friday. Pays a 2.5% dividend. Uptrend, pull back to the 50 with a kahuna. What this scan will find you will be stocks that are within 1% of the 50, have a kahuna, and are above their 200-day. Energen, another utility. Ugh, skip that one. Mohawk, carpeting. All right, a beautiful uptrend. How do I find stocks setting up? My goodness. I didn't prep myself on this one. So when I look at more stocks, do we see an uptrend? Absolutely. Is it a place to buy? Oh yeah. Kahuna, pocket pivot, sitting on the 50, mobile breakout from a squeeze, and a weekly bongo went green. Why isn't this on my buy list? Because I don't care how much money you have, at $28 a share, it's an expensive stock. But sometimes they work well. Let's go back a little bit. Let's just look at price and say, what other times would I have liked to have bought? I'd like to have bought it here. Mobile breakout from a squeeze and a kahuna. Maybe I'd like to buy it here. Mobile breakout from a squeeze, pocket pivot, and kahuna. I'd like to buy it here. I mean, you can't make this stuff up. There's a reason why I look for that setup. All right. Another setup I like is squeezing with a PSAR reversal to the upside. Let's look through here and see if anything I liked. Nope. So let's just pick one and see what it looks like so I can tell you what we're looking for here. By design, this is looking for stocks that are squeezing and price closed right below the PSAR dot. And the reason for this is these should not be stocks that are extended. The squeeze tells me they're not extended typically, and they're about to break out instead of stocks that have already broken out. So that one doesn't look good. It's already run. You see if any of these look good. I get a lot of takeouts in this. Sometimes I find them. There's a takeout. That might be okay. All right. FireEye. I'm not interested in it. Maybe it's a great stock. Probably is. Group is strong. Mobile breakout from a squeeze. The reason why I like this setup is simple. If I was to buy this stock, I would want to buy it when the stock price closed above that PSAR dot. So that PSAR dot on Friday it's right in front of my face. It's the worst place to hide something. Is at $15.87. So I would put a buy stop in, let's say at $15.95. So let's just say I put a buy stop in at $15.95. I'd probably pick this 200-day moving average as my stop. Because if the stock trades and closes below that, I want to be out. I don't want to be in it. That 200-day moving average is at 15.03, so let's give it a 3 cents. So here is a stock that I could put a buy order that says if it trades, and I'm not saying I love this stock, it's not my favorite. If it trades above $15.95, put in a buy order. And then immediately put in a stop at $15. So how much am I risking on this trade? I'm risking 95 cents. 6%. I've got a well-defined stop on the 200-day moving average. I have a well-defined buy if it takes out the PSAR dot. And oh yeah, by the way, it's coming out of a squeeze. I like this because typically the stocks are not extended and they're decent setups. Anything else I like up here? Fortinet. Fortinet looks actually the best. So here's a stock that's clearly in an uptrend. It's pulled back to the moving average, mobile breakout from a squeeze. Now, wouldn't I just love it tomorrow for this to have a kahuna and break above the PSAR dot? Even better. And look how tight this is. How tight do you want it? This is a PSAR dots. It's 46.26, and I might put my stop at the bottom of this bar, which is 43.55. So about 8%, and that's giving it a wide stop. I'd probably rather put my stop here under the 17, because if it drops below there, why do I want to be in it? So I use that scan to help me find stocks that haven't broken out yet. Some people ask me, well, how do I play to the downside? I'll spend a couple seconds and then I'm done. I can run the same scans to the downside. Let's see, any of these. All right, so let's look at gaming and leisure. Hasn't broken down yet. I don't want stocks that are buried already. Here's a stock that's in a downtrend. It's gone sideways and price is right above that green dot. The weekly bongo is red. The daily bongo is red. It's in a squeeze. Same rules apply. If this stock broke down below this green dot, I'd be interested in shorting it. And I would put my stop probably back here at the 200-day moving average. So I use the same scans, the opposite direction. And then someday I'll update my setup here. But I have a scan that I use that looks for the same. I look for stocks in a downtrend that pull back into their 50, and then they have a kahuna to the downside. So I use scans that are opposite. Now, the other thing that I do, if you don't want to go short, is within the universe of ETFs, you're going to find some really cool things. And I like the Direction 3X. And these are, that's not the one I wanted. Never mind, hold on a second. These are ETFs that some are long, some are short, but you can find ETFs that trade the opposite of the market. So let's look at, I know them by heart, so let's just look at, open up a chart. I talked about biotech. This is a 3X up, all right? So I get 3 times the juice to the upside. What if I think biotech's going the other way? It's short. I could short it by buying LAB down, which is obviously doing horribly. But if I thought biotech was going to bounce, I might be nibbling there. How about the Qs? This is a short the Qs. So if I think the Qs are going to drop, I can buy a Q short, and when the Qs drop, this should go up. So I can buy instruments that go contra to the market. On that note, I'm getting tired. You're probably getting tired of hearing from me. I'll just put on my buy list and leave it there for a few minutes. I'm nervous. Nervous isn't necessarily bad. The market can still go higher. It doesn't usually drop on a dime. But I'm going to be scouting for that Climax top, and I suggest you look for it as well. But I think I said it well in my PowerPoint. It's never different this time. It doesn't go up forever, but the markets can go in a single direction for a lot longer than we expect. And there's a lot of momentum, so maybe it's not done for a little while, but it's going to end sometime. And I'm taking profits. I'm going to reduce my position size and keep riding, but I'll be rolling up and out those options. So when it does roll over, I don't want to get hammered. Good night, everybody. Have a great week. Thanks for your support. See you next week.